Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I'm so glad you could be here with me. Today, I'd like to just give you some things to think about and show you something in the market. And I'm going to switch between today's and yesterday's price action so that I can show you this. It's a trick that often happens in the market. And if I'm not paying attention, then I find myself on the wrong side of the trade and it just eats me up. And I should be mad at myself, however, I'm mad at the market. So, one of the things I like to do at the end of the day is come and mark today's support or resistance and support. Now, this is yesterday's resistance and support. What I'm going to do is go ahead and transfer this to today's resistance and support. Now, last night when I looked at this candle, it was big pink like this, and I thought that it was going to engulf this price action. It looked like it was strongly going to do so. At the end of the day, we see that things have changed. Now, let's go to the 1 minute time frame so I can show you what I'm talking about. Okay, I've shrunk this a little bit so you can see this price action. This is the 1 minute time frame. And what often happens at the end of the day, you see where my level of support is. At the end of the day, this often happens. Now, chances are this price action is going to drop down a little bit more, but it's not really the best signal. But a lot of times at the end of your day, and it's generally about an hour before the market closes, I've noticed. Okay, I've moved this to right now. That way we can see where this price action starts. You see at it was, well, market time it was 21:10. You see this beautiful crossover and it was at 109.45 and we dropped down to 109 period. So let me show you what oftentimes happens at the end of a market day. And a lot of times I see this the hour before the market closes. You'll get a beautiful cross situation like this. And say you decided to take this at 109.40. So you took this at 109.40. Generally, you get about 40 pips. You go ahead and you ride this trade down for 40 pips. And what happens at the very end of the trade, somewhere, that's why it's so important to know where you are in reference to yesterday's support and resistance once you draw those lines. Because somewhere near support, what happens is price will speed up. And this last candle will speed up somewhere near or under support a lot of times if you're near support, and then it will quickly reverse on you like you see right now. So I'm going to show you this in yesterday's price action too, because I want you to be aware of this market trick. If you see that you have gotten a sufficient number of pips, go ahead and call it a day on that trade and be done with it, because what'll happen is you'll come up here, you'll bounce, you'll get resistance, you'll fall down, price hesitates, and it begins to accelerate. While you're waiting that price action out, you think, oh, well, now we are making a new low. You follow that and you end up very quickly on the wrong side of the trade. Okay, this looks like almost the exact same price action, except your moving averages are a little bit closer. And you'll see where you got this nice ride down yesterday. And I was actually in the market yesterday for these trades, but I just walked in a few minutes ago. But I did want to show you this. And you'll see where you had this hesitation right here. And you're kind of wondering what price is going to do. Is still on the bottom side of your moving averages. So once price starts accelerating down, you wait for the break of that low, you jump in, or either you jump in here. Either way, you'll notice what happens the very next two candles. It just engulfs all of this price action and you find yourself on the wrong side of the trade. Oftentimes, because of the pip spread, and for this Euro JPY, if you decide to take this trade right here, or just say you take this trade at the beginning of this candle, now you're right there. And within a couple of seconds, you find yourself, or a minute and a half, you are on the wrong side of the trade. 2 minutes later, you're at quite a bit of a loss. So then price continue. You think, oh, it's going to come here and it's going to fall down and I'm going to get my money, I'm going to break even or whatever, and price continues to accelerate against you. So this is a market trick that I want you to look out for because it happens more often than you think. And it just doesn't happen near support. It also happens near resistance. So if you're trading on a smaller time frame, please keep that in mind. That's how traders get on the wrong side of the trade. Now, they can change this at any time, but I did want to warn you about this. Also, you're going to have times where this is going to bounce. I'm pointing with my finger, sorry. This is going to bounce up and it's going to fall down. But a lot of times during the week, especially at the end of the market, generally that's not the case. So keep that in mind, please. Now, these are the quick things that I want you to keep in mind, but they are so important to determining whether or not you have a good trade. Well, I hate to tell people what to do. You may consider these things. Mark yesterday's support and resistance level. Note your position in the market in reference to yesterday's support and resistance, especially in a range bound market. It's so important in a range bound market. And chances are this kind of situation is a range bound market kind of thing. But I've been seeing it lately in the market, so I just wanted to bring it to your attention. Shrink your charts. It's if you're on a 1 minute time frame and you really can't see a trend bias, shrink your chart to see if the market is trending in any way. Look to see if you have any major economic reports that may affect your trades. Also, make note of the distance of your MAs to one another, and also note the time that you're taking that trade to determine whether it's a good trade or not. There are times in the market that you are going to look to get a good trade, and there are times that you're going to have to scalp. So study your charts to find out the times in the market when your your currency pair is the most active. I'm also going to show you this website right quick, and I'm going to give you the website so you can go to this, and it's also note at the times that your different currency pairs are the most active. Okay, guys, this is the chart. I'm going to move it down a little bit, and you can see that, and I'm just using the Euro USD, but you can pick any one of the currency pairs that you trade. See, it'll show you the hours that it's the most active. It'll show you the volatility on the different days of the week. So you may want to visit this. I'm going to put this link at the bottom of a good friend of mine shared this with me some months ago, and I've shared it numerous times on Facebook. I'm going to put this link at the bottom of this video so that you can come and you can see the volatility in your different pairs. And guys, they also have a correlation table. I'm going to put the link to this table down as well. And you see, you check the pairs that you trade to see how they correlate with each other. And I just checked the Euro USD because these are the pairs that I trade. And it shows you daily, weekly, the whole 9 yards. Guys, you can absolutely do this. You can be successful at Forex. And please don't forget this market trick. If price all of a sudden starts to accelerate and you've gone 30, 40 pips or 60 pips or so, then watch out for that price. If it's accelerating in the same direction as the current trend, then chances are it's a market trap. Guys, you can absolutely do this. Have a terrific weekend.